Imagine making smarter investments without the stress, without the guesswork. What if I told you the real key to winning in the market doesn't involve picking the next big stock, but something way more powerful? Stick around, because in the next few minutes, I'm going to show you how investing in knowledge can make you the smartest person in the room and the one who wins big. Welcome back to my channel, Clary Tale. Now, I know what you're thinking. That sounds too good to be true. But here's the thing. Every successful investor you've ever heard of didn't get lucky. They invested in something far more valuable: knowledge, understanding the market, reading the data, knowing the risks. These are the things that set apart the winners from the losers. Let's break down how you can start investing in knowledge today and how it'll pay off in the future. Let's get started. Point 1. The smart investor's secret weapon: education. A common mistake many new investors make is thinking the market is all about luck. But let's be honest, most successful investors didn't just get lucky. They put in the effort to educate themselves about the markets, trends, and financial indicators. If you're serious about investing, you need to understand the fundamentals of the market. Take Warren Buffett, for example. He's one of the wealthiest investors in the world, and he's often quoted saying that the most important investment you can make is in yourself. That means reading financial books, learning how the stock market works, and staying up to date with global events that can affect your portfolio. Let's say you're interested in investing in tech stocks, but you don't know how to evaluate the companies. A well-educated investor would research market trends, analyze financial reports, and understand the technological innovations each company is pursuing. By educating yourself, you're not just guessing, it's about making informed decisions that increase your chances of success. By investing time in education, you'll build a toolkit that helps you understand key concepts, from analyzing a company's financial health to understanding risk. The better you understand these tools, the more confidently you can make your decisions. So, start reading. Whether it's blogs, books, or podcasts, the more you learn, the less risky your investments will feel. Point 2. Reading between the lines. It's all about the data. The stock market is full of noise. Every day there are thousands of headlines about stocks, companies, and financial forecasts. It's easy to get overwhelmed by all the information out there. But here's the thing: data is where the truth lies. Successful investors know that the market isn't just about reading headlines, it's about understanding what's really happening. Let's take the example of Netflix. If you only read headlines like "Netflix stock rises 10% this week," you might think the company is doing great. But a smart investor would dig deeper, looking into subscriber growth numbers, production costs, competition, and more. This data paints a fuller picture of the company's future, beyond just short-term gains. Data also helps investors spot patterns. For instance, if you track a company's quarterly earnings for a few years, you might see trends in its performance that can't be captured in a single news cycle. Look at Apple, for instance. They've consistently reported revenue growth driven by product innovation. Understanding these patterns helps you predict where they're heading rather than reacting to market noise. So, when it comes to investing, the key is not to be swayed by the latest buzz, but to understand the data behind it. If you can start analyzing these patterns and data points, you'll develop a sharper eye for potential opportunities and avoid falling for hype. Point 3. Mastering risk management. Protecting your future. Risk is unavoidable in investing, but the most successful investors are those who know how to manage it. Understanding risk isn't just about avoiding losses. It's about taking calculated steps to protect what you have while still positioning yourself for growth. Think about it. Imagine you've just bought stocks in a new tech startup, and the stock price shoots up. It's tempting to let the gains run wild. But smart investors know the importance of risk management. Let's say the price starts to drop. A risk-managed investor would already have a plan, either by setting stop-loss orders or by selling part of the stock to lock in some profits. This way, you don't risk everything on a single bet. A great example is the strategy employed by Ray Dalio, the founder of Bridgewater Associates. Dalio's firm uses diversification as a key risk management strategy. Instead of putting all his investments in one sector or asset, he spreads them across different industries, countries, and even asset classes. By doing so, he minimizes the chance of a complete loss if one investment crashes. This balanced portfolio strategy can be applied to your own investments, whether you're trading stocks, bonds, or real estate. Remember, the goal is not to avoid risk completely, it's to manage it. So, take the time to learn about different risk management tools such as diversification, stop-loss orders, and hedging. The more you know, the better you'll be at protecting your capital while still allowing it to grow. Point 4. Staying ahead. Why time is your most valuable asset. Time is the one resource in investing that you can never get back. But the good news is, with time, knowledge grows. And the more knowledge you have, the more you can accomplish with your investments. The key is staying ahead of the curve. Consider how the most successful investors stay relevant. They're constantly learning. Take Mark Cuban, for example. Before he became a billionaire, Cuban was a voracious reader, devouring books on business, technology, and finance. He didn't just read for the sake of reading, he read to stay on top of new trends and innovations that could affect his investments. That ability to adapt and stay ahead gave him an edge over competitors. Another key factor is compound knowledge. Much like compound interest, the more you invest in your knowledge, the more it grows over time. Let's say you start learning about the tech industry today. A few months down the road, you'll have a much better understanding of what makes a tech company thrive, and that knowledge will help you make smarter investment choices. Over the years, you'll become a master at spotting opportunities before they're obvious to everyone else. The truth is, if you stop learning, you risk falling behind. The markets are always changing, and without staying up to date, you could miss out on the next big trend. So, make time for education every day. Even 10 minutes of reading or listening to a podcast can set you up for long-term success. Point 5. The power of consistency. Small steps, big results. Investing isn't a sprint, it's a marathon. The most successful investors understand that success doesn't happen overnight. It's the result of consistent, deliberate action over time. The key is to stay steady and disciplined even when things get tough. Take Jeff Bezos, for example. When Amazon was first starting out, it wasn't the giant it is today. Bezos made small, calculated decisions year after year, always reinvesting profits back into the company to build its infrastructure. It wasn't about making huge wins all at once. It was about consistent growth and reinvestment. You can apply this to your own investment strategy as well. Instead of trying to time the market or make big, risky moves, focus on small, consistent actions. This could mean regularly contributing to your investment accounts, learning new concepts every week, or tracking your progress. Over time, these little actions accumulate and lead to big results. In the stock market, small gains over the long term often outperform big risks in the short term. So, focus on the long game and be patient with your investments. Even if you can only dedicate a small amount of time or money at first, those small steps will pay off in the future. Now think about where you want to be in a year. Are you relying on luck or making smarter choices with the knowledge you gain every day? You have the power to change your game, starting today. So, why wait? Want to get serious about investing in knowledge? Start small, stay consistent, and you'll see the results. The best time to plant that seed of knowledge was yesterday. The second best time? Right now. Thanks for watching. Your next step? Pick up a book, listen to a podcast, or take a course. The smartest investors aren't the ones with the most money, they're the ones with the most knowledge. Start building yours today.